have this conversation with the team from Wefunder, and we also have an amazing entrepreneur here with us, Mark Harris with HeroWear, who is also considering a raise through crowdfunding. Just real quickly, by background, my interest and participation in the crowdfunding world goes back to 2011 when they really first started talking about the law changes, which of course won't be surprising to all of you to know that it was 2016, I think, before the laws actually passed. But I want to start today. We'll do some quick introductions with Jonny Price and Reed Ezell from Wefunder, and with Mark Harris with HeroWear, and we'll jump into Q&A and kind of go from there. And I'll do some brief intros, and then I'll let each of them jump on. But if you want to focus your attention there on Reed, Jonny, and Mark. I actually met Jonny several years ago. He came to Nashville for an event with Wefunder, and I don't think at the time his plan was to end up in Nashville. Maybe he can give you a little background there. But I'm very excited that he moved here and is running all of the operations for finding startups to list on Wefunder globally. I think it might have been more of a wife luring him in, but I'd like to at least take partial credit. Reed Ezell is a Nashville native, and Reed and I had a chance to catch up maybe a month or so ago, and talk about your interesting backgrounds. If you get some time, you should definitely talk to Reed. He's got an amazing background and some really cool stories and amazing experience globally. And then finally, we have Mark Harris, who's the CEO of HeroWear. Mark is a serial entrepreneur. I've met him when he was running his, I don't want to say first company, because I don't know if he had a company before it, but second. Good. Yeah, I'm glad I said that. So he was launching his second company, which turned out to be an extremely successful company in the genetic space. And now he's running HeroWear, which is doing great things to help people avoid injuries and build support for themselves for heavy lifting type roles. So why don't we start with some intros? Jonny, do you want to start us off and tell us a little bit more about your background and how you ended up at Wefunder?
And don't forget to tell us why cricket is so much better than baseball. I mean, really?
And don't forget to come off mute as well. Me being on mute allowed you to get that in there, Aaron. So yeah, my background, probably the most important thing to know about my background is that I was the captain of my college cricket team. So this is why I'm passionately advocating for cricket in this debate. But yeah, if you want to really get into a sport where the international matches last for 5 days, there are tea breaks in the middle of each day, and after 5 days it can end in a draw. A tie, then come talk to me and we can go watch a game over 5 days together. But no, seriously, I'll focus the majority of these couple of minutes on myself rather than cricket. So I'm from the UK originally. Started my career in management consulting. Then kind of did a sabbatical volunteering for a nonprofit in San Francisco. It was called Kiva.org. And we did crowdfunded microloans for entrepreneurs around the world. That was 2009. And while I was there, I met my wife, Ali, who's downstairs, looking after our 3 kids right now. She's from Nashville. So yeah, as alluring as Phil is, it was more her being from here and my in-laws living here that was the reason for us moving from San Francisco back to Nashville. But yeah, so I joined Kiva from Oliver Wyman back in 2011. I grew the US lending division of Kiva for 7 years. We made about 5,000 microloans to US entrepreneurs, really focused on low, moderate income entrepreneurs, tiny loans, $5,000 was the average loan. And the loans were being crowdfunded by individual lenders, lending $25, but out of motivations of philanthropy. So the most they could get back was a $25 principal. They were just doing it to help someone out rather than make a financial return. And then in early 2018, for reasons that we can also get into over beers, but I won't get into now, I found myself leaving Kiva and joined Wefunder, which is, we can talk more about today, obviously, but it's an investment crowdfunding platform that allows founders to raise much larger sums of capital through crowdfunding investments. So we do debt and equity. Vast majority of what we do is equity. But the average investment on Wefunder is 400 grand into a startup. So joined them in early 2018, been here for 3.5 years. My job is VP of fundraising. So I'm basically trying to find founders, which can be, a B2B SaaS tech startup, or a biotech company, healthcare SaaS startup, or it can be, a brewery or a restaurant on Main Street. One of my favorite ever Wefunder raises was Chattanooga Football Club. We invested about 3,500 Chattanoogan citizens invested about 900 grand into Chattanooga FC.
Now you're speaking my language, by the way.
Yeah.
No, the only sport better than baseball.
There you go. Yeah, I'm a soccer player as well. But yeah, so I lead our fundraising team, trying to find founders who want to raise capital on Wefunder, which is a lot of fun. And my wife and I we got married in Nashville back in 2010. But lived in San Francisco for 10 years, and just last year, with our third kid on the way, moved out here. And so I live in Sylvan Park now. We have an office now, a Wefunder office in East Nashville, which is a lot of fun. There's now 6 of us working out of there. Reed being one of them, myself and 4 others. So yeah, thanks so much for the invitation to be here. I know a couple of the guys in the attendees here, so it's good to see some familiar names at this point, but it's also really good to meet some new faces as well.
All right, thanks, Jonny. Reed, you want to go for it?
Yeah, my name is Reed Ezell. Really happy to be here. I'm a big fan of Studio Bank. I'm in a house right now that I bought with a loan from Studio Bank, so thank you very much. But I grew up here in Nashville, as Phil said, but left for a long time. I went away to college, and then I spent most of my 20s out of the country. Yeah, I won't, Jonny. I spent most of my 20s out of the country, and about 3 years ago decided to move back home, in part because I wanted to be closer to my mother, who's joined this call, but also because I wanted to be back in a community where I could contribute to growth, both economically and socially. I've been back here in Nashville for a few years working on a few different projects. I'm the founder of a nonprofit to bring a guaranteed basic income pilot to Nashville. But I met Jonny here about a year ago now and fell in love with the model of Wefunder. My role at the company is, right now my title is Nashville City Lead. So I'm the first city lead in the equity crowdfunding in Wefunder. I don't think there's another person anywhere that's focused on a single city, but really what our goal is to use Nashville and the huge growth that's happening here as a test case for what it looks like if we really spend time building relationships and digging into teaching people what the potential of equity crowdfunding is, and to grow that way. What I love about what Wefunder does is that it allows people to invest in people and ideas that they believe in. It allows them to also invest in ideas that will offer a return, but we're able to bring investors in to invest in business models and founders that traditional investment models often overlook. And I think that's the way to make sure that the growth of a local economy is inclusive, but it's also a way to make sure that the restaurants in your city are as cool as they can be. And that the startups that might not have gotten traction early in Nashville will really be able to take off. And our hope is that we can really contribute to the growth of the entrepreneurial landscape here in Nashville.
Awesome, thanks a lot, Mark. Let's hear your background.
Great, thanks, Phil. Good to see you. So as Phil mentioned, I'm a serial entrepreneur. I came here to Nashville originally for Vanderbilt. So I'm a triple door. I went down originally the pathway of becoming a researcher. So I did my PhD in cancer bio, but kind of realized I was more of a business guy partway through, and then switched gears and went into B school over at Vandy. And right after that, I moved out to Boston, where I worked for a genetics company. And I had really great timing there. Oh, I forgot to mention nights and weekends, sort of while I was making that transition, I started my first business, and that's where I fell in love with entrepreneurship. Ended up working in the genetics industry, seeing a really big opportunity there to create effectively a market maker that would help health plans, hospitals, laboratories, pharmaceutical groups work more efficiently together around this incredible growth area of genomics. And so started Concert Genetics back in 2010. Was in one of the original cohorts of the Entrepreneur Center and Jumpstart Foundry as well. And that's really what kept me here in Nashville. I probably would have been on one of the coasts if those hadn't been around here. So big supporter of what we've been building here in Nashville for quite a while now. Ended up growing that pretty substantially over about an 8-year period. We hit kind of big company maker deal with the United Healthcare as our first big health plan that came in. And I ended up bringing on a partner, a guy named Rob Metcalf, who had been COO over at Digital Reasoning, handed him the CEO reins. And then we worked side by side for about 2.5 years. And I got itchy feet to go and do it again. And so started looking around town here for my next business. And that's where I found HeroWear, which was basically a prototype in engineering lab at Vanderbilt. It was an exosuit technology that helps to offload the low back by about 20 to 40% during bending and lifting tasks. And it really drew my attention immediately. So I joined up with the inventors there, spun the technology out of Vanderbilt, and built a commercial product off the backbone of that technology, which we launched in March of last year. And really, it's really been taken off. So, you know, just in our first 10 months of shipping product, booked over $1 million in revenue. And now, you know, we've got over 100 paying clients, and they're really big groups, you know, Toyota, General Motors, Land O'Lakes, Organic Valley, US Army, just phenomenal opportunities. And so we are just preparing, you know, to find the right capital partners that we need to continue to expand with these clients. So, and that's kind of where I came upon Reed as I was looking at different opportunities. You know, I have had, I think I've done 9 angel rounds over the past 10 or 12 years. And the crowdfunding idea came up as an interesting opportunity for me. So I'm still evaluating that right now. So I'm not a plant, but I can tell you guys a little bit about some of the pros and cons and how I'm thinking through that decision.
Great, Mark. Thank you. Great introductions. Now let's learn a little bit about crowdfunding. I thought I'd take 30 seconds to a minute to just distill crowdfunding, what it is, just to give everybody an understanding of where it even came from. And I don't think a lot of people realize that it is actually illegal to advertise in a public way that you're raising money for your business. So that's why you see all these companies. I mean, think even back in the early 2000s, you know, Google, Facebook, Yahoo, all these startups that were raising money, they didn't have a page on their website that said, if you want to invest in our company, here's information, because that's illegal. You can't do that. And in the Great Recession, the government said, well, that's not really fair to people without connections. What about all these small businesses that are trying to start companies? How are they supposed to build awareness of their raise? You know, you have to be super connected to raise money in Silicon Valley or wherever there might have been capital. So entrepreneurs everywhere else didn't really have options. So that was the genesis of the laws. And I don't think a lot of people realize that that's really the main change. What the laws changed were, they said you can advertise, you just have to go through a regulatory process now. And part of that process is using a registered crowdfunding platform like Wefunder. The second thing I'll mention that typically confuses people is the really generally accepted 2 types of crowdfunding platforms. Number one would be a reward-based crowdfunding platform like Kickstarter, Indiegogo, GoFundMe, where if you're a donor to one of those projects, those entrepreneurs, you're usually just getting a product. You cannot get equity in the business. You cannot get interest payments. That would be illegal because those companies aren't registered to do a capital raise even with the new laws. Once those laws passed, you had these fantastic platforms like Wefunder pop up that opened up this second type of crowdfunding, which a lot of people call it equity-based, but I call it investment-based crowdfunding, because in theory, you could do debt too. So these types of platforms allow entrepreneurs to advertise their raise, and they can do it through a portal that also brings a large contingency of investors to the platform and to these entrepreneurs to give them another way to raise money. So with that quick overview, I'm going to ask my first question. Maybe Jonny, you can take it. And I know we've got entrepreneurs on here, we've got investors on here, so we're going to look at both of those perspectives and ask questions that are relevant to investors and ask questions that are relevant to the entrepreneurs out there. So I'll start with investors. Jonny, maybe you start off by talking about what's changed for investors with the new law and who can participate now versus who was able to participate before the laws came out.
Yeah. So, and when you say the new laws, you mean the regulation crowdfunding, May 2016. So regulation crowdfunding, as Phil mentioned, was rolled out by the SEC in May 2016. So previously, the only people that could participate investing in private companies were accredited investors. It's about the top 5% of the population is the number I've seen. To be accredited, I think it's 300K household income over the last 2 years, or $1 million of assets, excluding your primary residence. And so now with regulation crowdfunding, what we do, anyone can invest in startups they love. The minimum on Wefunder is $100. So now anyone can invest in a company for $100, just as they can invest in a public company in a platform like Robinhood, for a similar amount. So there's kind of very little barrier to entry. The SEC has put in place laws around how much anyone can kind of factor of your income and wealth basically determines how much you can invest. There were some recent updates to the regulation crowdfunding laws, which I wonder if you're referring to that as well, Phil. So in March of this year, there were some improvements to the Reg CF laws that the SEC rolled out. So previously, founders could only raise $1 million per year. Now they can raise 5 million. They can launch a campaign much more quickly. It used to take a month to launch a campaign. Now it takes an hour, and we can roll investors up to one special purpose vehicle, one line on the cap table. And also accredited investors can now invest an unlimited amount in Reg CF deals, just as they've always been able to invest an unlimited amount in Regulation D deals. So these law changes from March of this year have basically made Reg CF a lot better for founders. And what's cool then for investors is that we're seeing the caliber of founders significantly kind of improve in the last 6 months or so. So Mercury Bank, actually I shouldn't kind of endorse another bank on this call, but this is a fun campaign that's live right now, Bank for Startups. Rome Research is another awesome company backed by some unbelievable angels and VCs that raised $1 million in a few hours when they launched their Wefunder campaign. And a year ago, without these SEC rule changes, these guys just wouldn't have really given a second look to Wefunder. An entrepreneur as credible and outstanding as Mark, probably would have been a lot more reluctant to use a platform like Wefunder a year ago, but now it's a much better option, and so that means much better options for investors on the platform. So these law changes are mostly making it better for founders, but obviously if we have better founders on the platform, that's better for investors as well.
And Phil, if you just let me jump in, I think there's one other really exciting part of this for both investors and founders. And I think we're on this call tonight with Studio Bank's founder advisory board. And essentially what Wefunder or regulation crowdfunding does is allow any founder to build a board like this, right? Of people who are investing in their company, who aren't necessarily rich guys writing big checks to a few founders, but people that are invested in their success, who can act as a marketing team, advocates, and as and filter referrals, and also give them advice or feedback on a product, right? So it's about you're bringing in your friends, family, your community, people that are interested in the solution you're bringing to the market, and that makes you stronger as a company, and it also makes it gives your investors the opportunity to like actually potentially participate in helping you succeed.
Perfect. Yeah. So does Wefunder have tools that help connect the entrepreneurs with the investors, and can the investors get involved? I think, some entrepreneurs like investors getting involved and some don't. So, do you have controls in place even in that sense? Or, if I'm an investor, I have free access to, full access to the entrepreneur, and I can give them advice and I can help them however I'd like.
The way that Wefunder structures the deal, right? There's a lead investor in the special purpose vehicle that we create, and the founder is going to have a similar relationship to them that they would to a normal angel investor. But there is a Wefunder founder that lead investor is the voting force behind all of the capital raised, right? They're the person that is voting for all of that equity. But the founder also has your contact information, and in the most effective use of RegCF, founders are putting out calls for help, giving updates to their investors, and by engaging with those investors, these are people that have invested as little as $100, but on an average on Wefunder, the average investment is $1,000. It's kind of involving them in the conversation of your success. Now, so those tools do exist, but it comes from the founder side, right? So it's kind of if the founder is actively engaging, there's value in a community to be built there.
Yeah, and I think if a founder doesn't really want to engage, and that's very fine. I've seen examples of an update that a founder sent to their Wefunder investors. I was one of the investors, so I saw the update, and it said basically like, love receiving your questions and comments and suggestions. Read every single one. Don't have time to reply to all of you guys, but please keep sending them. And I thought that was kind of a fine way. It didn't come across as condescending or anything like that. And so okay, he wants to check out. There is kind of a reciprocity, right? So we believe that, yeah, if you have 1,000, investors, that's 1,000 kind of, enthusiastic brand evangelists and loyal customers and people that can help you in the business. And so, but probably, if you're not engaging with them, they're probably less willing to engage with you. So there's a bit of a quid pro quo there. But yeah, if you want to kind of disengage and not worry about, dealing with questions from hundreds of investors, you don't have to. And honestly, yeah, I would have thought that would be more of an issue for founders, but in the hundreds of Wefunder founders I've chatted with down the last 3.5 years, I actually don't think that's ever come up as a complaint that I've heard from founders.
And it sounds like that might be a benefit for an investor to be investing through a platform like Wefunder, is that you're investing alongside an army of 1,000 other investors who are all there to help the company. Maybe you could talk a little bit more about other advantages to using Wefunder or a crowdfunding platform for investors. Why should they?
Yeah, I think like maybe one kind of more concrete answer to that, one more kind of philosophical and wishy-washy answer. That the concrete answer is, if you make multiple investments in Wefunder, it's all there. Like it's kind of, it's in one place. You can view your portfolio of investments, and so there's probably some kind of slight kind of organizational benefits to doing it through the platform. The kind of philosophical answer is, if you kind of believe us that if you raise capital from an army of supporters, and then they're going to hopefully help you grow the business, they're certainly financially incentivized now to help you grow the business, and especially consumer facing companies, maybe that's can do really good things for your revenue growth. Then that makes it more likely that business is going to do well and grow, and that obviously is what you want as an investor. So that's probably, it's a little kind of abstract and tough to pin that one down, but that would be my kind of hypothesis.
Great. And let's shift to Mark for a minute. Let's hear from the entrepreneur side. What are some of the factors that led you into wanting to look at crowdfunding as a possible capital raise?
Yeah, I think crowdfunding. So one of the interesting things with crowdfunding is I don't think it makes sense for every business, right? So if I could, my last business, rolling out a genetics, market maker, it's not a particularly sexy business that people are going to get excited about. I think one of the things that has been with what I'm doing now, effectively we're selling super suits, right? And I've had so many people say, when are you guys going to be on Shark Tank? When are you going to Kickstarter? All these things always come up because most people have had back pain. Most people are working in their garden or on their car or helping their kids move into college and, feel that strain. So there is an obvious direct-to-consumer play with our technology. We're focused B2B right now, and that's one of the struggles I'm going through is how much do I want to really focus on it. But point there being, I think for D2C companies or somebody that has something that's particularly kind of sexy and plays well on an image or a tagline or a video, I think there's just a ton of opportunity to get people excited about it. The other thing that drew me to it is this ability to sort of multiply the investment. So one of the things these guys talked about at kind of having a lead investor is if you have a subset of people who, think about early stage in a company, you've got friends and family that want to participate, but they're not going to write a particularly big check, or they're not accredited investors, you're probably not gonna be able to get them in. And here all of a sudden, if you can pool some of those people and have them effectively seed that campaign, that'll kind of boost you up in the rankings and make it more likely you're gonna close that round through the campaign. And so it then multiplies the investment through the crowd. And then the other interesting multiplier I'm still kind of trying to wrap my head around is that ability then to have those people come and actually buy your product. So for example, as I've been talking with Reed and Jonny about this earlier this week, we put a buy now button on our website. We're not really focusing direct to consumer, but we've had this trickle of orders. So there's some demand there. So it's got me thinking, do we go out and put this out there, raise $500,000 and give everybody that comes in above a certain dollar threshold 50% off buying an exosuit, right? And then does their investment now turn into a sale, which multiplies on top of that investment? So those are a few of the positives that I've been looking at with this.
That's great. Yeah. And one more question for you. But before I do that, if anybody has questions out in the audience, either just type them directly in the chat and I will ask them of our panelists, or you can use the raise hand feature, which is under the reactions. And I'll see on the Zoom here that your hand is raised, and I'll call on you to ask your question directly. So be thinking about what questions you might have for the panelists. So Mark, well, one more question for you. How does this fit in with your capital raise plans as a whole? Is this like a full round, like this is the Series A or whatever, or is this one piece of a bigger, fundraising plan?
Yeah, I'm still trying to figure that out, and honestly, I'm struggling with it a little bit. So, we've already raised $3 million in seed funding. We are basically gearing up to do another 1 to 2 on a follow-on seed round, with the expectation to position ourselves to do a Series A, much larger Series A in 12 to 18 months. So the question is, how does this fit into that strategy, and does it fit into the strategy? I think it would be a much easier decision, honestly, if I was earlier stage, because there's a couple negatives that I'm thinking through right now. So one, you have to disclose financials, right? So obviously, you've got to think through that. Competitors would know, exactly where we stand. Again, we're still pretty early, so it's not a huge deal, but something to be concerned about. The second too is I've got sophisticated angel investors on here who are not familiar with this type of fundraising. And so there's questions, can I actually get them on board with this kind of a thing or not? I think most of my investors would just want to hand me a check rather than go sign up on a platform and sort of seed that round. You know what I mean? So that's a question mark. And then the other thing is being kind of focused B2B. it's also kind of a question mark on how much that might help me actually get connections. Can I leverage that crowd? Is that helpful to me or not? Really depends on when I'm going to make that transition from B2B to D2C.
I'm going to live pitch Mark on Wefunder in front of you guys here. So just on the second and third point. So on the second point, what's good probably to know is you can kind of combine regulation crowdfunding, which is where you're raising from unaccredited investors, with Regulation D. So most companies are using Regulation D 506B, where you're kind of required to privately solicit investors. But with Regulation D 506C, you can publicly solicit, and so you can basically have either a Wefunder campaign live in parallel to taking money from accredited investors in a 506C Reg D in parallel. And another thing that's common is to take large checks from angels in kind of in series initially, and then go on to launch a Wefunder campaign subsequently. We always recommend that if possible, if you can persuade them to come in through the platform, they do that. There's no real kind of downside for them. At least we don't think so. We also waive the Wefunder fees on checks of 25K plus. And for you, it kind of boosts the momentum on the campaign, which is kind of a big advantage to have them come in through the WeFunder campaign, but they definitely don't need to. So that's just on that point. And then certainly I agree with you. The B2C is kind of the slightly more of the sweet spot for WeFunder. There's a really cool company in Nashville, actually, it's live right now. I don't know if any of you guys have used Earthrides as an alternative to Uber and Lyft, but really cool company. It's Uber, but for Teslas. You just ride in a Tesla, and every time I've used it, it's been cheaper than Uber and Lyft. And it's founded by this absolutely incredible Latina woman who grew up in Antioch and was a lawyer, licensed attorney at the age of 24. She's just absolute like firecracker. So she's raised about 800 grand, I think, on WeFunder. She's live right now. B2C, very clear. And she has like a link to her WeFunder campaign from when you download the app, which is pretty cool. I would say, I think, for B2B companies, I think WeFunder is valuable as well. I was talking to a B2B company earlier in Nashville, actually earlier today, who's looking at connecting to nonprofits. He was there on Tuesday night as well, Mark. And my thing to him was, if you recruit a couple of hundred of WeFunder investors, they can help you find the nonprofits that you want to connect with, or even more directly, you could try to pit whoever's your potential customers. You could potentially try to pitch them as being investors, and even like enterprise or B2B customers. You could kind of tell them about the product and also pitch them on investing. So that's sometimes an area where doing a regulation crowdfunding campaign can help on the revenue growth side, even for B2B companies as well as B2C.
Perfect. So we have a question in the chat. Thanks for that, and keep the questions coming. So the question, Reed mentioned that WeFunder has an interest in helping founders who have traditionally been overlooked or found it difficult to raise capital, with a focus on inclusion. How has WeFunder thought about reaching those founders?
To be totally honest, it's still a process, but WeFunder is a social benefit corporation. Right. So our mission as a company, we are obligated to work to achieve that mission. The mission, as stated in our charter, is to fix capitalism by democratizing access to capital. Right. So we are working to make sure that there are, opening up streams of capital to founders that are overlooked or are out of the geographical areas that kind of traditional VC funding goes to, right? Just real quick, like 77% of VC capital goes to California, New York, and Boston. So part of that mission is not Boston, sorry, Massachusetts. Apologies to anyone who's from somewhere else in Massachusetts. That's not Boston. And like 1% of VC capital goes to founders of color, 3% goes to women founders, right? So there's a huge gap there in terms of people who are being overlooked. And businesses that might not fit the VC model that could succeed if they were able to get a little bit faster access to capital. So we explicitly, our business development team, I think the most explicit way that we're trying to achieve that is, if you spoke to all 16 members of the business development team on Wefunder, the fundraising team, everyone is very aligned with that mission. We are talking about it every day. We're starting to, track those metrics and make sure that we're actually achieving what we say, and we are. If you look at the kind of the data from, I think the last report on our website is from Jonny, correct me if it's 2019 or 2020.
20, yeah.
And it's a 10x multiple in terms of representation versus traditional investing on our platform. But we see, there's incredible potential there, right? There's a social justice aspect to that, right? There are businesses that fail. Statistically speaking, Black founders have access to like a fifth the amount of startup capital on average that a white founder does, right? This idea of a friends and family round in many, that's particularly thrown around a lot in the tech industry, right? If your friends and family if you don't have a rich uncle or a bunch of successful entrepreneurs as friends and family, it's going to be hard to raise. And that's what part of what we talk about a lot of time on our team is a community round, right? What Wefunder does is allow you to go out to, if you're going to open a coffee shop in North Nashville, go around in the neighborhood and find $100 checks, right? Go advertise it on social media and take $1,000 checks. This is a kind of a new way to activate capital. And the other, I mentioned this a little bit before, because Wefunder allows you to invest in smaller amounts, right? If you're making a $25,000 investment in a startup, right? You're making a bet on a startup. You're making a bet on in most cases, right, on the fact that startup's going to hopefully be successful and turn that $25,000 into a much larger amount. Now, on Wefunder, we encourage people to invest because they want to make money. But in some cases, there are businesses out there, and we're able to offer investment structures that allow someone to say, yeah, like I believe in this founder, I believe in this business, I'm going to invest $1,000 on the promise of maybe a 1.5x repayment on a revenue share deal, right? These are businesses that a VC would never look twice at. I mean, it's not even close, right? And so it's just a different model of raising capital that is more likely to include more types of founders.
Perfect. And, a statistic I also like to quote is that only 3% of companies get money from venture capital firms or angels. 97% of companies have to find other ways to get capital. And Reed, you mentioned that a lot of the companies that come on Wefunder aren't necessarily venture backable models, which for everybody out there, VC is typically wanting to see a path to a 10x, 100x exit. And, a lot of companies just want to grow to $50 million in revenue, and, they have a great business, but a VC is not interested in that. So that's a great thing. Mark, I want to ask you, kind of pivoting to best practices. Do you have a strategy or an idea of how you would raise money through crowdfunding? Have you thought about the path to I guess the strategy to get the capital in that you need?
That's what I'm trying to figure out right now. And I think one of the key questions I have is around, do you tag it on to the existing structure? Because I have commitments, now for that. Or do you basically create a little bit of a different structure? Do you have a priced round, and then a few months later, you set up a convertible note or something like that that's focused to kind of a different group of people? And again, maybe that's more that D2C focus, and there's a discount, and you're just really marketing it very differently. And that's one of the things I'm debating right now. So the truth is, I don't have a strategy right now. I am lucky to have done this before and have people who are backing me. And so what I'm really trying to figure out is, ultimately, I know I can close the round without it. It's not something I have to do. It's something I'm trying to figure out, like, can I get a really helpful multiplier effect out of it that makes it worth my while to go after? And that's where I'm kind of going through right now.
Can I just build on that? Because I think that's like such a powerful point. So for me, there's basically kind of two groups of founders for whom Wefunder can be interesting, right? As one kind of framework. The first is, if you're struggling to raise capital from conventional VCs, angels, right? So, that's where we want to make it easier for more founders in Nashville to be able to raise that first round, right? And if you're a serial entrepreneur and you've had success like Mark, then everyone's throwing money at you, right? Most kind of first-time founders, that's definitely not the case. I was talking to one first-time founder in Nashville who said, you can't get in front of angel investors here until you have $1 million annual recurring revenue, which is like, so we want to be an friends and family pre-seed capital to get to a point where, okay, angels and VCs in town can kind of look at them. So that's the first group of founders. And then the second group, and for us, like, the by far the most attractive group is Mark, where it's like, this isn't about the money. Like, you don't need to use Wefunder to raise the money. You could raise money from angels or VCs pretty easily. This is about either recruiting this army of customers and champions who you believe are going to do good things by actually buying the suits B2C on the website, or making an intro to an enterprise customer, or helping you hire an engineer, whatever. Or, and this is even more kind of, maybe out there, but like, if you do build a big company, like, wouldn't it be cool to kind of spread the wealth that you're creating that around more broadly among kind of a lot of people that kind of were your earliest supporters, friends and community members. So that's, and to my point earlier, now that we have 5 million caps, now that we have SPVs, test and orders, these rule changes from March of this year, we're seeing more and more founders who like, we just raised 120 million Series B from VCs. This isn't at all about the money for us. We just think this is a cool way to let our customers invest. Enthusiastic evangelists for what we're doing.
Perfect, thanks. Harry, I don't know if you want to close it down, or I don't see any other questions. Do we want to see if we have any last questions, or head to close it out?
Yeah, thank you, Phil. Thank you, Mark, Reed, and Jonny, for sharing kind of what's new in the capital raising ecosystem. And it's our interest to empower creators, and sometimes that's referring them to opportunities to bring in capital that's outside of a lending product, but it's a way for us to serve. And so the more we're informed, I think the better we can partner with folks. So really appreciate it. If there are any other questions, get a quick hand raise while we've got some experts here.
I just want Jonny to hang on the line. I've got one more sports question for him once everybody else goes up.
Well, if there aren't any more questions, just really appreciate your time. Becca Fuquay, who's in one of these boxes, coordinated the meeting. Hopefully you got some sweet treats and snacks to your address as well. But really, really love you guys and look forward to our next meeting in person. And Aaron, any final comments? April, Lorraine, we've got our lead director, Howard, as well on the line.
Just thanks for joining, and thanks to the panelists.
Very cool.
Thank you all for inviting us, and thank you for being here. We're always ready to talk, and reach out if you're interested in hearing more.
Absolutely. Well, have a good evening, guys. I've got 3 little ones that I hear in the background that I will tend to, and hope you have a great evening.
See you guys. All right, Jonny, who's your Premier League soccer team or football team?
Man U.
Oh, whoa, it's a hard time in Man U world right now.
Don't tell me you're a Liverpool fan.
No. I'm actually a Tottenham Hotspur fan.
Oh, okay.
So we play each other next weekend, or is it this weekend?
Oh,
This weekend.
I'm not optimistic. When Ronaldo came back, I was like, okay, game over. We're winning the league this year. We're back to glory days. That's super cute, Harry. But yeah, he doesn't seem to be, after we lost to Liverpool 5-0 last weekend. Looks like it's moving in the wrong direction right now.
Well, Tottenham are hit or miss, so it's anybody's game this weekend, I think.
Are you a fan of the new coach? What's his name? Espirito Santo, is it?
Yeah, I mean, I like him as a coach. I don't know about his playing style yet.
Uh-huh.
It's too soon. So I miss the Pochettino days.
Yeah, he was pretty awesome for you guys, but he got a pretty sweet gig at PSG.
I know.
I'm sure he's earning a pretty pay packet over there.
Coaching Messi and Mbappe.
Yeah, exactly.
And the same team and Neymar. Oh my gosh, it's an embarrassment of riches.
Well, Aaron, let's go watch a Nashville SC game together. We actually had Chris Redditch, who's one of the co-owners of Nashville SC. He was I interviewed him at the Wefunder House on Tuesday.
He's
founders and just talking to him about his experience launching Provider Trust. But
he's another friend of the bank and a friend of mine and Harry's, and
really
we know him well.
Yeah, he's an awesome guy. I've known him for a couple of years through
and we are season ticket holders for Nashville SC, so you're welcome to join us at any game you like. Same goes for you, Reed and Gino, and anybody else on the line.
I appreciate the invitation. I'm a season ticket holder as well. I just got my email today about playoff tickets. So
yeah, can't wait.
We'll go watch a soccer game and then we'll go watch a cricket game, and I can explain to you the intricacies of probably the most confusing sport in the entire world.
Aaron, it's great to meet you, and Harry, thank you very much.
See you guys. Have a good night.
Look forward to working with you in the future.
Yeah, same to you. Same to you. Good night.
Thanks so much, guys. Bye. Cheers, Becca.